I wanted to talk about student loans and how they affect your ability to qualify for a mortgage, because we see student loans all the time. During the pandemic, student loans were automatically put into forbearance by the government, which is okay. A forbearance on student loans, which is different than any other type of line of credit, is not looked at negatively because there's just a zero in the payment column. People had no control over the fact that student loans went into forbearance. But generally speaking, how do student loans affect your ability to qualify? So it's different with each agency, and by agency we work with 5 different ones: Fannie Mae, Freddie Mac, USDA, FHA, and VA. For the most part, I'm going to generalize here just for simplicity, we tend to use 1% of your total student loan balances as a student loan payment when we're qualifying. So if I can give you kind of an average example of what I see, when people have student loans, I would say the average amount of student loans they have, the balance is about $25,000. So I see student loans from like $2,500 to $180,000. So it can greatly affect your purchasing power. So it's something that needs to be discussed every time. Right now, everyone's student loan payments, for the most part, are reading a 0 payment. So we know in the future, those student loan payments are going to come due. So we can't qualify you not factoring in that you're going to have a future student loan payment. And we have to be conservative because we're lending hundreds of thousands of dollars that we want you to be able to repay now and in the future. So if you have a $25,000 total student loan balances, what we do is, on the average, we use 1% of that balance as a, like, I call it a dummy payment when I'm explaining. So I enter in a $250 payment, and then we calculate that into your debt ratio. To put it simply, because we do that, that allows you to qualify for $250 less in like a mortgage payment. So it's giving you $250 less per month of purchasing power, if you will. That's really important. Student loans are very common these days. We don't take into account right now unless it's fully documented. There's talk of like forgiveness and this and that. But if it's on your credit report, we're taking the conservative route and averaging about a 1% dummy payment in there to calculate your debt ratio. So it's really important to get that right so that we qualify you correctly. So you don't get under contract and then have problems qualifying in the middle. We try to prevent that. We don't like deals dying in the middle of the process. It's the most horrible thing ever. But hopefully this helps. I try to keep these videos simple, but if you have a specific scenario that you have questions about, I'm always glad to chat with you. Text, call, whatever's best for you. I truly love to offer educational and good information. Feel free to reach out anytime, and have a great weekend. Enjoy.